WPG Talk Radio 104.1.
Thank you very much. Welcome back. It's exactly 5 minutes past the hour. The following program that you will no doubt enjoy, it's 25 and a half years in the making, is presented by Chuck Malamut, our exclusive financial advisor to the Hurley in the Morning program. Chuck is a financial advisor. He's the managing director of his team, the Malamut Group, at Morgan Stanley's Northfield, New Jersey office for all of your financial planning needs. Call 609-383-2010. And the views, the opinions, the information expressed on this broadcast are those of Chuck. They do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast. They are subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley, Smith Barney, member SIPC. Without further delay, ladies and gentlemen, my brother Chuck Malamut. Chuck, how are you?
Good morning, Harry.
Oh, that doesn't sound right. Chuck, how the heck are you?
Good morning, Harry. Is that better?
That's much better.
Okay.
Wasn't your mic. Host error. Market update.
Harry,
unless you want to reflect on greatness.
No, I think that.
Okay.
I thought it was pretty interesting yesterday because I was up very early in the morning. Even though it was a holiday, you and I both worked.
Yeah.
I traveled. You were here in the studio, and it was pretty interesting to get. I'm trying to remember who's. I think I started texting you fairly early in the morning. It was about 5:30, and so I'm looking here, Harry, on the wall.
There's room.
And I was thinking if I got home very late last night, so I was thinking if I had time, I would really do something special for you. But
you were going to do something special,
but I don't want to do that yet because
it's premature.
Yeah, I mean your brother Don is
hanging
literally right there, at basically just I think one game behind.
But you know what the problem is, Chuck? If I would have followed the very tenets of my mentor. Because for those who don't know, Chuck Malamut is my mentor. Even though we're contemporaries, back when Chuck was my boss, there was that sort of slight age separation. Chuck was at a higher level. I think I can say this, and Chuck would be proud of it. I was his protege, or one of them. And so I'm a junior executive. Chuck is the main man. One of the things Chuck told me early on, and I don't even know if he remembers this, was trust your gut. Chuck allowed you to make mistakes. You couldn't make mistakes that would get him fired or get any of us fired because that wasn't great for business. But Chuck always said, trust your gut because most oftentimes you'll be right. Chuck, as you know, because I'm not a liar. In fact, I said it on air last Friday, so I have audio proof that I'm telling the truth. I could have dropped the hammer on the whole bunch, but I changed 3 items. One, I don't kick myself, because I really thought the weather was going to be bad in New England, and I changed my pick from the over to the under because I thought maybe field conditions would be poor and it would be a low-scoring game, so I changed that. I don't kick myself for that. That I'm willing to accept. But what I never do, I changed my picks on 2 games. I had Atlanta, and I changed it to Seattle, and I had Pittsburgh, and I changed it to Kansas City, and I lost them both. I could have dropped the hammer.
I was listening on Friday on the way.
You were
I
thinking,
was
what's
arriving,
he doing?
So I was driving to work, and I'm saying, oh, well, okay, Harry. You always go with your gut.
I know.
And still to this day, I mean, but
so instead of I would have been 14-2, untouchable.
So now you made it very interesting. That's all.
Yes. Now I made it that I'll probably lose, but I am still in the lead.
So there's 6 decisions left.
Yep.
So
I lead by 1. Chuck, all I know is in the 12 years of your for purely entertainment purposes only adventure that we do each year, has anyone ever won both?
No one has won both, Harry. So I'm standing here and smiling, and
you're standing before greatness, is what you're saying without saying it.
No, Harry.
That's not what you're thinking?
I'm standing here. I'm saying there's 6. Obviously we work with numbers all day, and obviously we're not. What we do for a living, but as I'm working through mentally, the probabilities of success
are looking good.
Well, we do a retirement. We do what we call a life view analysis, where we line up, a client's or prospective clients' assets, liabilities, potential expenses, and age, and Social Security and pension income, and all. We line all that up, and then we come up with a probability of success. Kind of the same thing here. So this is purely math and purely entertainment, but I'm hoping for you that things go right.
If I would have done the Malamut doctrine of trust your gut, I would have dropped the hammer and it would be over. I think you'll agree. If I was 14-2 and second was 10-6 with 6 decisions and me leading by 4, it would almost be impossible.
But Harry, that's not the way the book is written right now. So we'll have
the book is written 11-5.
So in any case, not to belabor the point, but certainly, as you and I chatted, the first 6 games of the playoffs were very, very disappointing. And I'm sure the networks weren't terribly pleased with the outcome, and especially in the second halves of these games. But certainly, for sure, the eyeballs that were captured on Sunday just had to be remarkable.
Well, I'll give you a for instance. I don't know about Pittsburgh and Kansas City because I just didn't bird dog that one. But I can tell you the Green Bay Packers-Dallas game, just shy of 50 million viewers, and that is for a game that started an hour or two before dinner time and was over in the dinner time hour. That's remarkable. That's big.
Yeah, I would imagine that the Kansas City-Pittsburgh game didn't quite catch as many eyeballs, but
that would be my guess. It was in prime time, but it would be my guess.
It went fairly late, but again, it sets up for a weekend. Make sure Mike Gillum, whatever.
I'm not changing anything this time, so it's over. And in fact, Mike is away, so I can't.
So you have no show with him. That's good for you.
I should have never. I talked myself out of my own. If I don't win this thing, I'm always going to think of that because the one I'm saying I did it. I did that myself. The 2 I shouldn't have changed. But Chuck, let me ask you this, and then we'll get into your show. The holding call on the 2-point conversion, because I stayed up for the first half of the Pittsburgh-Kansas City game, fell asleep because obviously I wake up at 2 o'clock. I have to sleep sometime. But I woke up at the end of the game. I thought the holding call was really ticky-tack. I think that should have been a no call, and as a
Pittsburgh Steelers fan, Harry, my son is a huge fan of Pittsburgh Steelers and the Penguins. We were very pleased with the call. I thought it was the right call.
Okay, so if you took out fanaticism, like
I still think that it was the right call. Yeah, I mean, look, again, we can sit here and talk about football for the next hour, but here's what happened. Andy Reid has been phenomenal coming off of a bye week. I think it's been 18-2, but the problem is that the clock management there was just awful.
Well, he's never good at that.
I mean, he's thinking that he's going to. I mean, think about statistically the odds. Score and get the 2, which he did, but he didn't, or they did not, and they had no time.
Yeah,
and they virtually had no timeout. So, having said that. There are some issues with Pittsburgh. The fact that they could not, and it's the way the Kansas City plays defense. I mean, they'll let you go up and down a field, but they won't let you get beyond the 20.
When I saw that they gave up 4 field goals in the first half, I thought, you know what? Kansas City's losing 12-7. They're right where they want to be.
Yeah, if Pittsburgh converted 1 or 2,
over,
it'd be done. But
I mean, Green Bay almost dropped the hammer and closed the door on Dallas. But then Dallas got back in that game. That was impressive. Boy, that was a good game, wasn't it?
They were both good. So, this is what, hopefully next week, this coming weekend, they'll be good. And unfortunately, for the most part, the Super Bowls are usually busts. The last couple ones have been good.
Before we go to break, which we're going to go, and then we'll come back for your market update, Chuck is going to talk about the global economy on his program today, and he's going to make 10 predictions for the new year. We'll get into that, 10 predictions for 2017. I'm not asking you because I already put my picks in even before the point spreads are out. I'm that confident what I'm doing this week. So we'll see what happens, and I'm not changing. Let me ask you, because I think the Green Bay-Atlanta game is almost impossible to just grasp. They're both hot quarterbacks. They're both playing great. They're both on big winning streaks. Atlanta is at home. That's, I think, one helpful factor. Do you like anybody in that one?
I mean, Aaron Rodgers is the guy he's kind of godlike. I mean, you think about
oh, Jay Hurley. If Jay Hurley's listening, oh my God, he just passed out.
It's just amazing that what he's able to create. They get the impossible done.
Chuck, 3rd and 20.
3rd and forever. And I mean, not to take anything away from the receiver, but I mean, Aaron Rodgers has done this multiple times.
How about the kicker making 3 field goals because he had to do the one twice? 56, 50, and 50 again. Man, that was impressive. And then the Dallas kicker making the long field goal.
Like I said, I'm really looking for. I won't. I mean, I would think that I would give an edge to the Packers. I mean, they've been there, they've done that. You just have a very, very well tenured, experienced playoff quarterback that's leading the charge. No disrespect to Matt Ryan, but I don't think. I mean, they're both good quarterbacks, but I think Aaron Rodgers is basically in his own on his own planet right now.
And New England and Pittsburgh. Isn't New England right now just head and shoulders above?
They are, but I am going to take the upset here.
Chuck's voting with his heart, kids. And, he's not going with his mind. He's going with his heart.
I am going to be rooting for Pittsburgh.
Okay. You can root for Pittsburgh, but accept
and I think they'll win.
All right.
There we go.
Man. Hey, listen, they're on a 9-game winning streak or something, aren't they?
They're playing great football.
I mean,
New England manages to get it done. I mean, it's just
these are 2 interesting stories
for sure.
The key in that one's going to be how many points.
Yeah, I don't know the number yet. I haven't looked.
But I think New England at home, the way they're playing, and they get very much because of Tom Brady. The tremendous defense gets no headlines. Their defense is incredible.
They had a tough first half, both sides of the ball, but they went in at halftime, made their adjustments, and they basically embarrassed Houston.
Yeah, they did. There's no doubt about it. 17 minutes past the hour. Back with Chuck in just a moment. This portion of our program also brought to us by Congress Hall, which, as you know, recently last year celebrated an entire year of incredible events. Really was very, very exciting. Every week there was just something iconic happening at America's oldest seaside resort. They've been providing hospitality since 1816. Now 2 full centuries and 1 year later, Congress Hall continues to be known for its beauty, relaxed sophistication, warmth, and sincerity of its staff. Very much award-winning. You can reserve today by dialing 888-944-1816. I've done that several times over the past several months. It's very easy, right from the website, and you'll get the best rate that's available. You can look at different room types. They have what we would call in the old days, Chuck and I, double-double. They have kings. They have queens. They have ocean view. They have what's called town view. And they have several other, opportunities where if your desire is to stay in Congress Hall and you're not looking for the absolute best view, I'm not going to talk like some of the old stadiums that had obstructed view seats. It's nothing like that. But there are views that are not as perfect as the ocean view, for example, where you can even get a break on the rack room rate. 888-944-1816 on the World Wide Web at congresshall.com. And let me remind you that this Sunday there is a wonderful event that's going to be taking place, and we're going to be telling you all year long about great things that are going to be happening. The Winter Concert Series continues this Sunday, January 22nd. It's a supper and hymn sing. And that's our focus this week in the run-up to that. It begins at 5:30 p.m. and features classic American comfort food like fried chicken, mashed potatoes, cornbread, all served family style. I have to say, there's nothing that I just said that I wouldn't just sit down and devour. I love that. I love chicken. I've told you before I could eat chicken every day. After the meal, there'll be singing of hymns, some solos, and some with the whole group. There'll be a collection plate also that's going to be passed that will help support the Cape May Food Closet. So it's all happening at Congress Hall in cool Cape May. When you reserve, tell them that Hurley in the Morning sent you. We'll be back in just 60 seconds. More with Chuck Malamut right after this. I mentioned just a little bit ago this portion of our program brought to us by Resorts Casino Hotel Atlantic City. They're on the boardwalk, 1333 Boardwalk, the boardwalk at North Carolina Avenue in the World's Playground. And take this down. I would put it, I have it right in my smartphone. Put it on your home screen, resortsac.com. If you go, it's very simple to do. You just go to resortsac.com from your web browser, and then just grab that little icon down at the bottom, and it lets you put it right on your home page. Because this is a great spot to book a room, find a great place to eat, buy tickets, your Star card, and your player access login. I call it basically your portal to Resorts Casino Hotel Atlantic City. Let me give you a few great things that are happening this month and next. Upcoming entertainment, Howie Mandel. Not this Saturday, but next Saturday. So tickets are still on sale at Ticketmaster.com for Saturday, January 28th. Air Supply in concert in that iconic showroom at Resorts Casino Hotel Atlantic City. Saturday, February 25th. Tickets on sale at Ticketmaster.com. You just heard about the free self-parking and the free surface lot parking at North Carolina Avenue. And finally, new members, listen up, earn up to $500 same-day slot cash. It's been called the best new member program in Atlantic City. New players who sign up for a Resorts Casino Hotel Star Card can earn up to $500 slot cash same day based on your tier points earned. All you have to do, visit the Resorts promotion booth for more details. Resorts Casino Hotel, 1333 Boardwalk in Atlantic City, on the World Wide Web at resortsac.com. Chuck, the market update.
So, Harry, as busy as the media is on items that are not particularly market related, the market continues to move onward and upward. But last week took somewhat of a pause. If you look at the Dow, the NASDAQ, the S&P 500, the NASDAQ was up 1% for the week, but the Dow and the S&P were down ever so slightly. There were a couple of events that happened during the week, and particularly the market was waiting until Friday when a couple of the big banks, started to report, fourth quarter earnings, particularly Bank of America, J.P. Morgan, and Wells Fargo. So for the most part, the results were mixed. Bank of America, J.P. Morgan topped bottom line expectations. Wells Fargo reported below consensus results. But Harry, I don't think that's really surprising. And when you look at everything that has been happening with Wells Fargo over the last several months, so. At the beginning of the day, Friday, those three companies, they did in fact move. They moved up fairly significantly, but you had some intraday profit taking, and I think what was happening as we got to the end of day Friday, being a 3-day weekend, no trade on Monday, international markets opened, the Trump rhetoric, created by the media continuing onward and upward. I think a lot of players, so to speak, just kind of, took a step to the sidelines and decided let's rest for a few days. Now,
Chuck, let me throw out a statement that I've been told by several people. I don't personally buy it at all, but I'm going to say it anyhow because these aren't idiots that are saying it. And they're basically saying, but they were wrong before they said what they're saying now. They said you buy the election result and you sell
the inauguration. Yeah, I mean, I've seen multiple articles, and including one that came from our research as well. I think, Harry, it's a matter of when you look at what happened in the fourth quarter, particularly since November 8th. Let's look at financials. Financials were up 15%. Over that time period, so
sweet.
It doesn't. I think that it's normal for any sector that moves like that, or the market in general, to take a pause. I mean, you want if you are a long-term believer, this is an extended bull market, and we think that is the case. Although as we get into the latter part of this year, it might get a little choppy. There's nothing wrong with having the week that we just put in. There's nothing wrong with the market moving sideways. There's nothing wrong with the market, in fact, moving down. I mean, for a little bit. Now, all of us, from an investor's perspective and a financial advisor, we don't want that to happen. But again, the one thing that we have continued to stress with our clients is the fact that this is not a sprint. This is a marathon. And if you could tell me, and when the S&P and the Dow Jones in particular was down in excess of 800 points the night of the election, and then recovered and we moved onward and upward, you would look at me and I'd say, Harry, what planet are you on? That's impossible. So the one thing to recognize, from an investor's perspective, is that you need to kind of try to separate all the news, because a lot of it is really a non-event. I mean, what we are focused on right now is fourth quarter. United Healthcare, Morgan Stanley came in this morning. Both beat expectations. Good. The Dow futures earlier today were down in excess of 100 points. Concerns about Brexit. The speech coming from the Prime Minister as far as the exiting process. So right now it looks like we're going to be relatively flat to the open. But again, we don't focus on day-to-day activities. We are looking more at where we think we're going to be at the end of the year, at the end of 5 years.
Let me give you an analogy before we get to the bottom of the hour break, Chuck. You know how, if you've seen it, and I think a lot of our listeners have seen it, if you watch birds fly, they fly
in a pattern.
In a pattern, and there's a leader at the head. But the leader takes a break, and somebody else then flies up at the point and becomes the leader at that point. I think for the past 8 years, China and other nations that were growing much more than we were like taking a break. We were never the lead bird that was flying at the head of the V. We were somewhere in the back, sort of just treading water or something, and that's, I think, a big reason why we had little to no GDP growth. I think now the world not only expects, but we're going to deliver. I think we're going to go back to the lead, and that America is once again going to be looked upon as the leader that the rest of the world will look towards again, where we haven't had that for the past 8 years. What do you think of that?
Harry, I agree with you. And if you look at the global economy, the World Bank right now is predicting a growth of about 2.7% for 2017. And you think about the fact that it's fairly stagnant in a lot of countries. I mean, we've talked about what's happening in Europe, the ongoing drama with China, but the fact that I think a lot of countries and a lot of people are depending upon what's happening here within this country. The fact that if you look at small businesses, Harry, the jump in the optimism factor that was most recently reported is incredible. I mean, who would ever believe that the number of business owners who expect better conditions jumped 38 points in a relatively short period of time? The index last measured at just about 106. It was the highest level we've seen in the last 12 years. So the increased optimism is leading to more business activity, capital investment, and other like. So
are markets becoming at all impressed, Chuck, with these various, not just one here and there, these various car manufacturers who are bringing 1,000 jobs here, bringing business back to America? There's something going on right now.
Harry, look, there is certainly something to be said. I think that the markets look obviously at what has happened, and they're looking at what is going to happen. And unfortunately, last week when some of the big banks reported, the top line missed. We've had these discussions before, so I think for the market and the economy to operate on all cylinders, is you need these reports to come where not only do you beat expectation on the top line, but you beat it on the bottom line as well. Now, we're going to know that relatively soon, but think about Q4, because it was a lot of the numbers are what is happening. A lot of it's baked in, and it's what had it's what was happening before the election, not necessarily after. I know you're not going to be terribly happy to hear this, but believe it or not, the economy was starting to turn.
Well, it was the Trump bump.
Well, no, even before that. I mean, the economy, the economy was starting to move in the right direction, even before the election. But on a comparative basis, I think that there's no comparison as to where we are now versus where we were.
The only challenge I would say to that would be there were many times over the past 8 years where it looked like we were turning a corner or improving, and the Fed was very, very uncertain and really just didn't know, is this solid enough that we can actually raise rates? But they never did. Excuse me. I'm not laughing. I'm choking. They never did. So it never got good enough that they got into a rate increase environment, which I think proves the point that it was shaky 8 years.
Oh, for sure. Look, up through year 6 and into year 7, I definitely agree with you. I mean, you think about.
But even year 8.
You think about
what was
2000.
What was GDP before the first quarter? Or before the fourth quarter?
In the 2-ish range. I think 1.8 maybe. Yeah. I can't. Look,
nothing above 2.
So we had an annual rate increase twice. We had it in 2015, 2016. Right. The indications are probably 2 this year, with the next one coming in June. Obviously, all data dependent information is going to hopefully steer the Fed to make the right decision. But
Trump will have more rate increases in the first 6 months than Obama had in 8 years. That's one of my predictions. Certainly within the first year, he will have more.
I'll go with the first year, Harry. Maybe not so much the first 6 months.
First year.
Because you got to get 2 to get even?
Yeah.
So let's go first year on that.
Brief time out. He's coming right back. Chuck Malamut. If there's any more in terms of the market update, obviously the global economy, Chuck has been addressing as well, and he'll have 10 predictions for 2017 coming up. Chuck Malamut, the official financial advisor for the Hurley in the Morning program, official and exclusive. Kirk Conover weighed in that he believes the United Kingdom will have the second highest growth rate, second to us, and he credits it with respect to them leaving the European Union. As I predicted in advance, I was the contrarian, because everybody in the world media, in Great Britain, here in America, everybody banked on the fact that Great Britain would stay with the European Union, and in fact they did not. Then all the naysayers, all the geniuses said, oh my gosh, this is going to be terrible for Great Britain, and of course they have the highest GDP in the world at 2.2% at the present time. Interesting how wrong the experts have consistently been, but not Chuck Malamut. Our official financial advisor continues. We'll be back again for all of your financial planning needs. Simply dial 609-383-2010. 38 minutes past the hour. Chuck Malamut continues. Chuck, are you to your 10 predictions for 2017?
So Harry, these are not necessarily our predictions, and we use a lot of different sources for information.
Okay.
So, and if you go back last year, we kind of briefly chatted about 16 of more right than wrong, 8 right, 1 wrong, 1 half wrong. It was pretty good. So, and I think, Harry, one of the things what we're going to talk about, I don't think it's necessarily unknown. I mean, it's kind of putting pen to paper. So
these are not 10 predictions necessarily from you. These are 10 possibilities or something.
No, they're predictions.
Okay.
I mean, it's we talk about it every year. It's not necessarily, like I said, it's I guess if I was 11-5 in a football pool, I'll take credit for all my picks. If I was 5-11, I'm not going to take credit for my picks.
Exactly.
So I'm not going to take credit for my picks.
Exactly. My man.
I had to slide that one in.
That was nice.
I'm surprised, Harry.
That was smooth.
But anyway, so
I will never mock. I will never ridicule my mentor.
So anyway,
never.
Look, what we just talked about before the break. The fact of the matter is, this is not going to be an easy transition. I mean, it's been very, very evident in what we're seeing. Who would ever believe in our lifetime that what we grew up to believe and accept and what we were trained to do as citizens of this country, that what we're witnessing today is actually happening? It's kind of, it's kind of like a bad dream. At the end of the day, we are supposed to support the president-elect. Now, whether it's the president-elect of a union, the president-elect of the country, the governor of a particular state, it's, that's what we all have been,
right.
trained to do.
Elections used to have finality, and you accepted the results of the election. Even if your candidate didn't win, you wished your new leader well, because that's what we've always done.
Yeah, so you think about the market rally, what happened at the end, after the election. I mean, the market, moved in a very positive direction very, very quickly. Now the market is starting to digest the fact that things might not be as easy as originally forecast. Even though you have, the Senate and the Congress and the president all on the same side of the table, this is not going to be easy, Harry. And I think,
in fairness, you still have the loyal opposition, not as important in the House because the House has different rules. But in the Senate, in most matters, the Republicans don't have the numbers to dictate. The other party can slow anything down that they choose.
So if you look at the expectation is you're going to get growth, but you're not going to get. I mean, I think it might be challenging this year to get that over that 3% number.
I do think Trump has a pen and a phone, though.
He does. So we're thinking that we're going to.
That was okay for 8 years. I have a pen and a phone.
That's correct.
Okay,
so, and the fact that you have seen jobs come back or jobs being created in a relatively short period of time, even though Trump is not the president right now. I mean, I think that's going to obviously continue and. Some people might not like the way he operates, but it is the way it is. So we're thinking, Harry, it's going to take a while to get all these initiatives in place. So don't be at all surprised if we have a mediocre year, at least in the beginning. Plus I'm saying that 2 to 3% range is probably where we're going to end up in all likelihood.
Better than anything we've had.
So, the dollar is going to continue, we think, to strengthen. And we've talked about this before. You'll probably trade at par with the euro. I mean, we're very, very close. I mean, think about where the euro was 3-4 years ago, 1.23, 1.25. Your favorite topic, unemployment or employment. So, what is the real employment or unemployment number? As we talked about last time, I think it was, or the week before that, 2016 was a pretty good year for growth. We can debate the fact that what do those numbers really represent, but average monthly new jobs were averaged at about 185,000. We're pretty much of the opinion that we're going to stay above that $150,000 number in 2017. So we're 4.6. That's, quote, the reported number. We think that's going to be reduced, probably in that 4.4% range in all likelihood. And you think about that, the last time we saw that number was 10 years ago, May 2007. Average hourly earnings bottomed at below 2% 2 years ago. We think that's going to exceed 3%, as evidenced now is what's happening in the last several months. And the last time they hit that number over 3% was back actually June 2009. So you kind of put the numbers together, 2007, 2009, make 2017 minus 8 equals what? That kind of answers your question.
It does, but here's the only thing I don't understand about your business, and that's why I wasn't good at it and you're great at it. I find that there's a level of intellectual honesty when we talk about these numbers that isn't there. Not from you. You're citing the numbers. But, I mean, when we say, we haven't seen this level of unemployment rate this low in a decade, but we didn't have 100 million rather, not participating in the workforce 10 years ago.
I don't disagree with you on that, Harry. But
it's
I mean,
just a shame that this gets almost like it's apples to apples.
Maybe the number might get lost somewhat. But I think that the trend is that, and there's a lot of companies looking for qualified people.
Well, that's a good sign because the numbers in this past 8 years have been crooked as can be. Not you, the government, the way they've been reporting these numbers. When you take people out that have been looking for a job for 30 days and they haven't found a job in 30 days in a horrible environment, and then you just take them out, and then you say, well, the unemployment rate went down to 4.6. Anybody could do that. I mean, if I didn't miss 5 games in the last 16, I'd be 11-0 right now if I could just take 5 away.
If we stopped eating, we'd weigh about 130 pounds.
Yeah, I would be very happy and
no, you wouldn't look at 130.
No, I wouldn't look at 130.
Maybe 150.
So, I would be 150. But you get what I'm saying?
I do.
The numbers are misleading.
They could be a little, maybe at times considered to be somewhat disingenuous,
they could be honest.
But I think that,
Kirk Conover, if you would text me before the end of the hour, Chuck might be gone by then. I'd like to know what the number of workers not participating in the workforce 10 years ago, what that number was.
No, he's got his job assignment now.
He can get that. It's just under 100 million. It's like 97 or 96 point some million right now. When you think about it, Chuck, that's an astronomical number.
Yeah, Harry, that number is huge. It's
devastating. And it's unfortunate because to then say, and we have 95.4% work, employment is just it's a terrible, deceiving, position.
All right, let's move on because we're not going to get all these done. I think what I'm thinking
Kirk's
about.
on the task, though.
I think what we're going to do is probably
Thank you, Kirk.
Maybe we'll hit a couple more, and then we'll save the rest for next week. So as you know, investors, not savers, have had a relatively good time if they've owned treasuries and corporates and municipals for extended periods of time. We think that, the 10-year – think about the 10-year treasury, Harry. In the summertime, July, actually, the 10-year treasury hit 1.37%.
Right.
Back in 1981, a long, long time ago, it peaked at over almost 16%.
Yeah, people would buy it then.
So,
wasn't that a problem, Chuck? Who's going to buy? Who's going to lock up something for 10 years? And of course, with penalty, if you're at 1%, who's going to do that?
Bonds trade like stocks. Bonds are an important part of a portfolio. Bonds, for the most part, provide that stability. So you will continue to see, bond buyers, and you look at
and that's regardless of yield.
You look at our debt versus other countries' debt and ratings and rates. But I think, the most important thing that people are losing sight of is the fact that the bond markets, it's not going to go away in any way, shape, or form. So the fact that you had, for the most part, reported relatively low inflation. Rates and inflation do, in fact, have a tendency to go hand in hand. So think about, we kind of just chatted about this. The Fed has indicated, a couple increases potentially in 2017, and we think the same thing will probably hold true in 2018. As far as stocks are concerned, we think that there's still a fair amount of growth. We are more of the opinion that it's going to be more moderate, and the market's not going to react the way it did at the end, at the night of the election, and then moving forward. We have had multiple, what I'm going to call mini corrections over the last several years, and those corrections range anywhere from 5 to 10%. If we do, in fact, get the improving economic indicators, if it does, in fact, happen, the market will continue to move onward and upward. But, the bottom line, you're going to have a continual, tug of war, so to speak, between rising earnings expectations and the eventual, price valuation, the PEs that's referred to. So if PEs deteriorate, then Harry, that's going to have a negative impact on equities. So you might see the highs reached as we get into the middle of 2017, but it's anybody's guess. And again, I think what happens is you have to be a marathon runner, not a sprinter in this. So. I think with that being said, we'll cover one more, and then we'll save the rest for next week. And I don't think this comes as any surprise. We think that equities will outperform fixed income again. It'll probably be the sixth year in a row as you continue to get a little more volatility. So, as we got to the end of the year, it's not uncommon to see that stocks outperform bonds, with stocks rising and bonds falling in the latter stages of a bull market. So, if we do in fact get real growth, it's going to be difficult for fixed income. We're not throwing fixed income out. We're just saying that on a comparative basis in a horse race, equities will probably outperform fixed income this year. Why don't we put that on hold then, if we could?
Yep. And
then we'll come back next week and we'll do the next 5. And I'm thinking that come Friday, was it Friday noon to be exact?
Yes.
Surprised you're not going down there, Harry.
No, I'm going to just enjoy it. I have no appointments scheduled for that moment. I'm going to enjoy it in front of about a 65-inch flat screen, and I can't wait.
Yeah, so
it's like a colonic cleanse.
That's the beginning of your weekend, and we'll be checking in with you Sunday early evening and see how you're doing.
I know. It's either going to be over one way or the other, or it's going to go right down to the last day.
Yeah, you see, the one thing, the difference between you and me, where there's a lot of things that were very similar, a lot of things were very different. I'm just not big on forecasting my predictions to a wide range of listeners, because I don't like being wrong.
Here's the thing. If you notice, I basically only had you do it. I didn't do it. Think about the whole conversation we had.
Yes.
I asked you what you thought.
Yes.
I didn't say what I think. We'll be right back.
Harry, thanks for baiting me. Have a good week.
Thank you.
See you.
We'll be back. For all of your financial planning needs, turn to Chuck. That's Chuck Malamut, 609-383-2010. When we come back, I'm going to have barely enough time because we're going away for 5 minutes. It's a long break. We're going away. When I come back, I'm going to take a stand on a quote that was uttered by an official that we all know about Governor Christie. Next, it's Hurley in the morning.